This is Rod Kusanen, Spooman for Risk on December 11th, 2009. All times on the chart are Central Standard Time, and our first trade of two big trades for the day were based upon the new low on the premium that occurred here and here on the ES and NASDAQ premium at 8:56 a.m. Indication was the Protrader setup would cause us to see a return to a price of 1100 even. So we look for taking a trade off of the move up. The second trade happened after the move down, okay? Happened after the move down, and we're looking to take a short trade again. Now let's take a look at where the strategy took the trade and why we took it. As you can see, we took a trade right in here, but you really can't see the reasons for that. So what we're going to do is take a look at a few other examples that told us this was a good time to trade. Now, the first that you can see on this chart is a group reversal potentially forming. We're going from dark magenta to green. There's a change taking place here, but why pick that particular spot? You don't really see the reversal until a little bit later, and this was a manual trade. Let's see why. This chart is tracking a tick data feed using a 50 tick bar. We have our group reversal system on it. You'll notice that the market rose up from the lower Bollinger into the upper Bollingers, and the color of the bars was very compelling to us. Gold, as we know from our color bar system, is indicative of strength, whereas dark red is weak. At 8:58, as the market moved up, there was still strength, but at 8:59, okay, 8:59, there is weakness. So the weakness on the tick is one clue. Another clue is bank, $BANKX. We're running a 20 tick bar on bank using our group reversal system. And what do we see happen here? 8:55 new high on bank, 8:58 lower high on bank. Okay? And then 8:59 even lower. 8:59 is even lower, and the color of the bars are gray. That indicates extreme weakness. So being that we're looking at other internal market indicators such as banks, such as the tick, we saw reason to take a manual short trade right there at 8:59, and that worked. Now incidentally, why didn't we take an automated trade? Well, the reason was there were no group reversals that were taking place at that particular time. And oftentimes what we'll do is we'll use other market internals when we don't have group reversals to execute our trades manually. So a little later on, as the market dropped into the projected price on the premium of 1100, we took some of our profits just a little bit prematurely here at 1125, and then the rest of our profits were taken at 917, just as it dropped below the lower adaptive price zone band right in here. So that was trade number one. Let's take a look at trade number two. Now let's take a critical look at what we were left with right after that trade. You see the red line above us. That's another gap above the market. So indication is the market's going to run back to 1103 1/4 or better. That could provide a setup for a long trade. So down in here is where we have our exit, and then shortly thereafter and somewhat late, This chart provides us with a group reversal to go long. And we're again looking for a gap fill at 103.25. So the long trade gets taken at about 9:27, and you can see the gap fill finds itself taking place just a few minutes thereafter. But as that gets filled, you'll notice there are two more gaps below the market, one at 1101.50 and 1150 here and here. So now there's another opportunity to short the market. Now you'll see here on this chart a very obvious group reversal. As the market came up and hit the high of the day at 1104, we went from green to cyan to gold back to cyan. There's your group reversal, time to go short. Now we don't see the group reversal, the trade itself, shown on this chart, and let me show you why. Number one, we simply didn't have the strategy set up on this chart, but instead we have the strategy that actually set up on a different chart. And you see the group reversal take place right here on the screen. Now, what we're seeing here is due to the fact that our strategy has the capability of monitoring what is happening on every chart on our screens. This particular setting here allows us to monitor everything that's happening on chart 4, 5, 6, 7, 8, and 9. So we don't have to physically have a strategy on each of these charts. We can have it on just one chart, and the strategy will pick up any group reversal that's happening there and then plot it on the strategy where this plot it on the chart where the strategy has been placed. So there's your trade. So the trade takes place over here, and we just revert back to the chart that we referred to earlier that plots our gaps. And there's the gap that's left remaining at 1150. And you can see that ultimately gets filled. And gets filled just before 10:09. There's the gap fill. So that could certainly have served as a profit target. Nice, at least 3.5 points for that trade. And as it turns out, we took a little bit off the table at 10:05, got right back in at 10:07, and then finally pulled all of our contracts at that gap fill. And just as a final point, although the trade itself was pulled over here, right there, finally, the strategy actually did not get us out of that trade until at first here. Those are strategy trades here as well as here. And we took some manual trades off of those signals right in here, and then again in here. Right in here we took some final manual trades. And we used the same system for taking these manual trades as we discussed for the short trades earlier, by the use of the tick as well as the bank. So that's our video for today. Appreciate your attention. Come to us at RSKsys.com. Ask for a demo and we'll show you more. Rod Kusin and Spooman for Risk.